I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, Natural Resource Specialist at the Oxford Club. His website, investmentu.com. Welcome back to the show, Sean.
Thanks very much for having me on.
Gold and silver performing very well right now.
Yeah, I mean, gosh, we've had both metals hit 2-year highs, actually above 2-year highs, frankly, and they look like they might want to take a rest soon, but, you know, it's very hard to judge exactly when that will happen. And the longer-term outlook just looks good. I mean, basically 3 ingredients. One is peak gold, which I've talked about on your show before. You know, I mean, years of low prices caused the miners to, like, shut mines, stop exploring, that kind of thing. So we're at global peak gold and silver production. You combine that with rising consumer and investment demand, and that's a recipe for higher prices. Then we had the Brexit vote in Britain, and that's where Britain had a non-binding referendum on whether it should stay in the EU or not, and the Leave vote won. The really interesting thing is the two political leaders who pushed for the Leave vote, which is one guy from the Conservative Party, one guy from the UK Independence Party. They both quit right afterwards, which is like stunning, considering that they both got what they wanted and they're not sticking around to run things afterwards. So, but the Leave vote is shaking up global financial markets because this casts some doubt on the safety of the euro, or I should say the viability of the euro, especially because the Austrian version of Donald Trump won the recent election in that country. It might be too unkind to call him the Austrian version of Donald Trump, but he runs along the same themes, right? And so he wants a Leave vote now. There might be one in France. There might be one in other countries as well. And so this is really worrying the market because the global financial markets depend on the free flow of cash across borders, right? And if all these countries are breaking agreements and breaking alliances, that will tend to slow things down. And also all the debt that has been built up, and they have built up a lot of debt, really depends on these alliances sticking together. Because suddenly who is going to pay all that EU debt? Is it going to be Germany or who? So this is really driving the global financial markets in a panic, and that's why we saw a strong dollar in the U.S. rally. That's why we saw a strong rally in the U.S. dollar, and even though it kind of backed off its highs immediately after the Brexit vote, it's starting to come back. That's why we saw the euro plunge. That's why we saw the Japanese yen take off, because that's on the other side of the EU, so the least likely to be affected by the fallout from there. That's why we saw the British pound fall like no one has ever seen. And, of course, what does all that stuff do? That stuff makes the hard currencies, gold and silver, look so much better. And then we have low and negative interest rates. There's $11.7 trillion in sovereign debt that's like U.S. Treasuries, but their versions of it around the world, now carries negative interest rates. That's up from $7.9 trillion in the first quarter and 0 at the beginning of last year. And the fact that those rates are going into negative territory lifts the weight off gold, because there's normally a carrying cost to owning gold, in that when you have money invested in gold, you aren't invested in something that pays interest like treasuries. Well, now those, that like sovereign debt doesn't pay interest. In fact, it has negative interest, and that actually makes gold a high yield investment in some ways of looking at it. So it's a 1-2-3 combo, sending gold higher. Silver sprinted last week, just sprinted higher. And I think this is partly because, it's an extremely precious metal, definitely used in things like solar power and all other industrial uses. But also, there's a growing realization in the market that there's a real dearth of new silver projects in the works. It won't be easy to bring new silver production online because the projects just aren't there. And so when you look at that and you look at this tremendous supply-demand gap that we have in silver now, I think that it can go higher. It just breezed through $20, went up to 21, I think it was 21.22, something like that. Might have been 21.32, 21.42, something along those lines. Anyway, it was over 21. Then it pulled back under 20, but I don't think it'll stay under 20 for long. It might have some backing and filling to do here. I mean, after that huge sprint last week, in an ordinary market, of course, would have to back and fill, but these aren't ordinary markets, so it's hard for me to actually guess what will happen. We are seeing tremendous breakouts in all kinds of miners that suddenly makes some really serious sense. Their profit margins are widening like the Grand Canyon. And some old projects which were shelved, and I have a few in mind, in the miners that I'm currently looking at. You know, they were shelved because those miners said, well, this really doesn't make sense until silver gets to $20, so let's just put it on the shelf. And like everyone said, yeah, we won't be looking at those things for a decade. Well, guess what? Silver's at 20 again. Suddenly those projects make sense, but you can't bring them on soon, can you? It'll take years to get those online. But once we see those start to see the work begin to actually bring those online, those companies that will have that future silver production will probably rise even more. So there's plenty of excitement in this space. I think it's a very exciting time to be looking at things. I know we've had a huge rally in both silver and gold. I mean, gold is up 27% for the year. That's like since January 1st. It's actually up higher from its lows. Silver's up 42.5%. So people might say, well, for any commodity, that's a huge move, and you're right. You're absolutely right about that. But when these things get moving, they can really gain some momentum. And so I think we could go much higher from here for silver and gold.
We'll have more with Sean Brodrick right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Sean Brodrick. Sean, what's your outlook on crude oil right now?
Not as bullish as the precious metals. That said, if the central banks get into a panic and start just opening fire hoses of like money to spray at the markets because they're really worried, then certainly crude can go higher because all that money floating around, more and more of it gets invested in things that matter. And so crude could ride that wave like anything else. However, if that doesn't happen, then we've probably hit a near-term top in oil simply because anything over 45, we see more production start to come on. two things that have been supporting oil have been tremendous demand from the U.S. consumer. They've been driving like maniacs this summer, and it looks to be certainly, continuing on that way, because even though prices at the pump are up a little bit, they aren't up nearly compared to last year or the year before, so that's good news for the drivers. The other is that China has been building up stockpiles. I mean, buying a tremendous amount of oil because it knew oil was cheap. However, there are some indications in the market that their tremendous accumulation of oil for these stockpiles might be winding down. If that happens, then that could have a seriously downward, that could really trigger things to move downward rather quickly. So my outlook is not actually bullish in the short term, but that said, when you think of crude, you always think of black swans, because things go wrong in spectacular fashion in the oil markets, whether it's Libya, whether it's Nigeria, places that could literally blow up, in all this clan warfare and like other stuff that just ruins the oil markets there. So things can happen that can push the price of oil around either way. I expect tremendous volatility, but that's not where I'm putting money to work right now, because this run in crude has been tremendous. We do know more supply is coming online as we speak, and so if things stay as they are, then we won't actually see things really move much higher from here. But a black swan event, of course, could really send things much higher.
Now, all through the spring, we kept hearing the storage facility should be full, and that's going to drive prices way lower. Did that really happen?
No, they actually built more storage. It's not that hard to do. Storage is still above 5-year averages for many things, though. But still, it's not like, well, this is all the storage you can have in the world. There's plenty of ways to store oil, so that's not a problem. The real problem might be if the Chinese decide they have enough in their storage, then they'll stop buying. I shouldn't say stop buying, but slow down their pace of buying. And if they do that, that can really weigh on oil prices. But right now, barring, say, some oil storage facility blowing up, storage shouldn't really enter the picture right now. So I really wouldn't worry about that.
What about other commodities? Anything else cooking?
Well, certainly coffee. This is one thing that affects all of us who actually have to wake up in the morning, right? That's been on a tear. Man, I'll tell you, it has been breaking out like nobody's business. Just as with gasoline, we are seeing tremendous demand for coffee, and not just like your McDonald's coffee, the good stuff too. There's tremendous demand for it. That's extremely good. Sugar, also breaking out very nicely. I guess we need sugar to go in that coffee, right? So, we're seeing a lot of stuff move there, and they've had a real drought in Brazil, and so that's kind of been weighing on the whole sugar thing and like stuff like that. Orange juice, I guess this is the breakfast special, basically, is what we're talking about, right? But orange juice has just been on a tear since May. It really, really has. And I'm not sure. They could be having problems in the fields. I don't know if anyone knows anything about a hurricane that I don't, but it's just really, really looking good. So I would say look at the breakfast special. Things look extraordinarily good. Platinum also looks good, by the way. Copper, had a nice rally for a while, and like we're all starting to breathe a sigh of relief, and it's just having a terrible day today, so I don't know what to make of it. I really don't like to say the global economy is healthy with copper acting the way that it's acting. It just really can't get any traction. It did have some nice traction for about a month, but that seems to be fizzling out. We'll have to see how the week ends. But things like platinum and palladium, they look good. So some parts of the global economy look good. Other parts are still you're looking at like old Dr. Copper, and he says things are going to cool off. So I'm not sure who to believe on this. All I can think is gold and silver look great. Oil, maybe not so much. Certainly buy breakfast because it all looks good. And certain other industrial metals look great too. Nickel, for example, looks fantastic right now.
And nickel, that's a key component in batteries, isn't it?
Oh, that's a key component in everything. People don't realize how much they need nickel. But yeah, nickel looks very good. And that's the thing where, like, everybody needs nickel, and yet new nickel mines starting up just isn't that often. It isn't that often that you get a new nickel project, rolling out. Now, for years now, I mean, I have been to places where people talk about new nickel projects. The problem is they're really capital intensive. It takes a lot of money to get one of those things going up, and the prices just haven't been supportive of it until recently. Maybe this is the time for something like that to happen, but if it doesn't, then we'll really look at a price squeeze higher in that metal.
Thank you so much for chatting with us, Sean.
Hey, thanks. I hope everyone's having a great summer. I plan to have a good time. And it's always great speaking to you.
Well, you did have an interesting July 4th fireworks incident.
Are we going to talk about that, about how I almost blew myself up?
Yeah.
For sure. It's kind of an American tradition, right? You just have to push the envelope. And when you're setting off those, like, rockets that head up and explode in the sky, sometimes they don't work. But, hey, none of us got burned, and we still have all of our, like, eyes and fingers and toes. So I consider that a victory down here in Florida, let me tell you.
What was that, a homemade display or an official one?
It was homemade. I mean, well, certainly store-bought, but I mean, we were just launching them off in the backyard because that's part of the fun of the 4th of July. Everyone gets together. We have a big cookout. Ribs was the special this year, and then we launch out fireworks. And so that's how that went.
One got hung up on a tube.
Just, one of these rockets, it just, probably because the tube had been used too much, and if that happens sometimes when they're supposed to go off, they just stick, and like we had about 1 second to realize everything had gone horribly wrong, and then the entire backyard exploded. But as I said, we were all standing far back enough, we were wearing eye protection, it wasn't that horrible of a deal. There are certainly people in Florida emergency rooms, as we speak, who had a much worse 4th of July than I did.
Well, Sean, thank you so much, and I'm glad you had a good outcome.
All right, thanks. Great talking to you.
My guest has been Sean Brodrick, Natural Resource Specialist at the Oxford Club, his website, investmentu.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our popular YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.